As President Trump's tariffs take effect, various industries share, in their own words, the impact on their operations and their bottom lines. As we head out to break, we take a look at the auto industry and how it's being affected.
New this morning, we are getting a new look at prices at the grocery store. July Consumer Price Index shows inflation for food prices over the past month. That's steady, but over the past year, that number is 2.9%.
The higher the tariff, the more likely it is that the company will come into the United States and build a factory in the United States so it doesn't have to pay.
America was once the beacon for global corporations, a land where opportunity, innovation, and access to the world's largest consumer market made it the ultimate home for industry giants. From Silicon Valley's tech titans to Detroit's automakers, the United States was always the destination for ambition. But something has shifted. And today, the quiet sound of corporate footsteps heading north tells a very different story. Big U.S. corporations are leaving, moving their headquarters and operations to Canada, and the implications of this exodus are far-reaching, stretching from the boardrooms of New York to the small towns of America, and even to foreign capitals around the globe. This is not just a corporate reshuffling, it is a transformation of America's economic identity. Picture a CEO in a gleaming Manhattan skyscraper, staring at a balance sheet that no longer makes sense. Costs are rising, supply chains are disrupted, and tariffs introduced under Trump's aggressive policies have turned yesterday's profits into today's losses. For that executive, the choice becomes clear. Close facilities in the U.S. and relocate operations to Toronto, Vancouver, or Montreal. These moves are no longer hypothetical. They are real decisions being carried out right now. And Donald Trump is furious. Inside private meetings, reports reveal his anger boiling over. He has accused corporations of being traitors, abandoning the American worker, betraying the very nation that gave them success. On the rally stage, he calls out executives as globalists, accusing them of selling out America for cheaper deals. Yet behind the rhetoric lies an uncomfortable truth. These corporations are not leaving out of disloyalty. They are leaving because Trump's own tariff wars, trade battles, and political unpredictability have made the U.S. a difficult place to stay. Trump's sweeping tariffs on steel, aluminum, pharmaceuticals, agriculture, and even technology were meant to protect American jobs and industry. Instead, they raised production costs, making it more expensive to manufacture within the U.S., while competitors overseas thrived. Retaliation from India, China, and Europe further cut off American access to global markets, turning once thriving exports into shrinking contracts. For businesses already operating on razor-thin margins, Canada began to look far more attractive. Stable regulations, membership in trade agreements Trump abandoned, and proximity to the massive U.S. market meant corporations could relocate just across the border and immediately benefit. But the effects of these decisions reach far beyond corporate ledgers. They hit American workers. Imagine the Detroit auto worker who has spent 20 years building cars, only to be handed a layoff notice because his company has decided to reopen its plant in Ontario. Think about the small-town family whose entire community depended on the jobs provided by a single factory, now left behind as those jobs are transferred north. These are not just numbers on a chart. They are lives reshaped by policies made in Washington and choices made in corporate boardrooms. Globally, the ripple effects are profound. India has built new partnerships with Europe and Asia, creating supply chains that bypass the U.S. entirely. China continues to strengthen its position as a manufacturing giant, expanding influence in markets once dominated by American firms. And Canada, often overlooked in global strategy discussions, now stands as a surprising beneficiary of America's retreat. By offering corporations stability, global market access, and trade agreements spanning Europe and Asia, Canada has turned itself into a hub for the very companies America is driving away. The economic fallout inside the United States cannot be ignored. Infrastructure projects are stalling as tariffs drive up material costs. Corporate relocations mean tens of thousands of American jobs vanish, not because of foreign competition, but because of policy-driven inefficiencies at home. Venture capital, once flowing freely into U.S. innovation, is increasingly cautious, with investors diversifying into global markets that feel more stable than Washington's unpredictable climate. This shift even affects national security and alliances. As corporations move, they carry not just jobs, but also influence, technology, and global leverage. When Canada gains these assets, it gains political and economic strength, while the U.S. risks a diminished role on the world stage. If America's economic credibility falters, its negotiating power in global trade, security, and diplomacy falters with it. The ethical question becomes unavoidable. Are Trump's policies protecting workers or pushing corporations out the door? Does America First truly serve the American people when its consequences leave workers without jobs and communities without hope? At what point does protecting industry become political theater rather than economic strategy? The corporations themselves argue they are simply responding to the realities of survival. They cannot operate in an environment where costs outpace profits, where tariffs cut off global opportunities, and where the political climate adds daily uncertainty to their long-term plans. For them, Canada is not a betrayal. It is a lifeline. Yet for millions of Americans, the move feels like abandonment, another wound in an economy still recovering from past crises. And so we return to the people most affected, the workers, the families, the small communities. Their struggles are not abstract. They are personal. A family in Ohio wondering how they'll pay their mortgage after their factory job is gone. A farmer in Iowa watching his market collapse under retaliatory tariffs. A young graduate in Texas realizing the career she dreamed of has been outsourced just across the border. These are the real consequences of corporate relocation, and they form the human face of a global story. America now faces a critical question. Will it continue down the path of isolation, tariffs, and economic uncertainty, or will it find a way to reassert itself as the world's leader in innovation, stability, and opportunity? Canada has shown what stability can achieve. India has shown how partnerships can strengthen global supply chains. Even Europe, long dependent on U.S. leadership, has begun charting its own course. The world is moving forward, and America must decide whether to lead or be left behind. America was once the global beacon for corporations, a land where innovation thrived, opportunity overflowed, and access to the world's largest consumer market made it the ultimate hub for growth. From the skyscrapers of New York to the manufacturing belts of Ohio and Michigan, the United States stood as the center of business ambition. But in recent years, a subtle yet powerful shift has begun. The quiet footsteps of corporations moving northward toward Canada are now becoming impossible to ignore. These aren't small businesses chasing lower costs abroad. These are some of America's largest corporations, giants of industry, moving their operations and headquarters outside the U.S. The message is clear. America is becoming a less stable home for business, and that reality is shaking the foundations of the nation's economy. Donald Trump has watched this trend with rising fury. His policies, his tariffs, his trade battles, all designed to project strength, are ironically pushing businesses away. In private conversations, he lashes out, furious that corporations are leaving. On the stage, at rallies, he brands them as traitors, accusing them of betraying American workers, abandoning the very soil that made them rich. But behind the fiery rhetoric lies a harsher truth. Corporations aren't leaving out of spite. They are leaving because the very policies meant to protect America have backfired. Trump's sweeping tariffs on steel, aluminum, pharmaceuticals, technology, and even agriculture were designed to put America first, but they came with unintended consequences. Costs of production skyrocketed, exports became vulnerable to retaliation, and supply chains fractured under the strain of policy-driven disruption. Competitors overseas, especially in Asia, gained an edge while American corporations saw their profit margins collapse. Canada, meanwhile, became the unexpected winner. With stable regulations, open trade agreements with Europe and Asia, and easy access to the U.S. consumer market, it offered everything these corporations needed to survive and thrive, without the chaos of U.S. trade wars. Imagine an auto manufacturer in Detroit facing higher steel costs because of tariffs. Every car rolling off the assembly line becomes more expensive, harder to sell abroad, and less competitive compared to foreign alternatives. The solution is cruel but simple. Close plants in Michigan and reopen them in Ontario. Imagine a pharmaceutical company in New Jersey suddenly cut off from raw materials due to supply disruptions with China and India. Costs skyrocket, profits vanish, and the path forward leads across the northern border where Canadian trade deals guarantee access to critical markets. These aren't abstract moves. They are happening now. For American workers, the results are devastating. Families who depended on factory jobs for generations are left jobless overnight. Communities whose entire existence revolved around a single employer are hollowed out. with small businesses collapsing as the workers who once supported them vanish. A worker in Ohio may look at his children and wonder how he will pay for their education now that his company has relocated. A farmer in Iowa may see his soybeans rotting in silos because foreign markets have slammed shut in retaliation to tariffs. A young graduate in Texas might realize the career she dreamed of in the tech industry has now been uprooted to Toronto. These are the human faces of a global policy failure, and they reveal the personal cost behind Trump's trade battles. The world beyond America is not standing still. India is forging alliances with Europe, carving supply chains that bypass the US entirely. China continues to cement its dominance as the world's factory, offering stability and efficiency that US companies increasingly crave. Europe, once reliant on US leadership, is now charting its own independent course. And then there is Canada, long overlooked in the geopolitical arena, now quietly stepping into the role of economic stabilizer.